Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about REGENXBIO INC quarterly report. REGENXBIO Inc. offers a range of gene therapies that address various genetic defects. The company's pipeline includes treatments for wet age-related macular degeneration, diabetic retinopathy mucopolysaccharidosis, type I and II, Duchenne muscular dystrophy, late infantile neuronal ceroid lipofuscinosis, type 2 CL-NTWO disease. The company also licenses its NAV technology platform to other biotechnology and pharmaceutical companies, and collaborates with AbbVie Global Enterprises Limited on the development of REGENXBIO outside the U.S. In addition, REGENXBIO Inc. provides services through gene therapy product candidates licensing agreements, collaboration, and research partnerships. The REGENXBIO Inc. stock price has remained relatively stable over the past year, with no significant changes despite several notable news events. While some announcements, such as the Q3 2025 earnings report and the completion of pivotal enrollment in the Duchenne gene therapy program, led to a 2.76% increase in per-market trading, other events had little impact on the stock price. The lack of significant change can be attributed to several factors. Firstly, many news events reported no explicit stock price changes below or above the 0.09% threshold. Secondly, some announcements, such as the FDA review extension of the biologics license application for RGX-121, and the publication of preclinical results demonstrating functional benefits of a novel microdystrophin construct in RGX-202, may have been seen as expected developments by investors. Additionally, the company's financial performance has been stable, with a 50.2% increase in stock price since the beginning of the year. The strategic partnership with Nippon Shinyaku and the royalty monetization with HCRx also provided a boost to the company's finances. Overall, while there have been several notable news events, they have had little impact on the REGENXBIO Inc. stock price, resulting in no significant changes over the past year. The primary drivers of revenue growth for a company are multifaceted. Key contributors include license and royalty revenue from sales or sublicenses, royalties on net sales of specific products such as Zolgensma, collaborations with other companies like Nippon Shinyaku and AbbVie, upfront and annual fees from license agreements, milestone payments based on development and sales-based milestones, sublicense fees, royalties on sales of licensed products, and fees for services related to product development and manufacturing. On the other hand, revenue decline is often driven by a decrease in net loss, indicating potential changes in expenses or revenue. Lower sales of specific products, such as Zolgensma, can also lead to lower license and royalty revenue. These factors highlight the importance of monitoring both revenue growth drivers and decline indicators to make informed business decisions. Net income and profit margin changes. A decline in performance. The financial summary reveals a decline in net income for the company. In just 3 months, from June to September, net income decreased by $2.3 million. This trend continued over a longer period, with a significant drop of $49.2 million in 9 months ended September 30. Unfortunately, due to cumulative losses since inception, profit margins are not applicable. The lack of information on profit margin changes makes it difficult to determine the underlying reasons for this decline. However, the substantial decrease in net income suggests that the company is facing significant financial challenges. The company's financial performance indicates a concerning trend. Despite its efforts, the company has been unable to generate positive operating cash flow in either of the 2 periods analyzed. This suggests underlying issues that need to be addressed to ensure long-term sustainability. The company's debt level has undergone significant changes over the past year. Initially, it increased from $206,338 to $363,751 in a short period. However, this was followed by a substantial rise in total royalty monetization liabilities, increasing from $59,687,000 to $191,634,000. The balance at December 31, 2024 and September 30, 2025 also showed a notable decrease, indicating a possible repayment or settlement of some debts. The non-current portion of the debt was initially reported as $148,432, but later decreased to $40,149 by September 30, 2025. This suggests that the company may have made efforts to reduce its long-term debt obligations. In terms of interest expenses, there has been a substantial increase from $820,000 in Q3 2024 to $13,169,000 in Q3 2025, and from $3,242,000 YTD 2024 to $32,732,000 YTD 2025. The company's interest expense also increased by $12.3 million for the 3 months ended September 30, 2025, and by $29.5 million for the 9 months ended September 30, 2025. Overall, while the debt level has fluctuated, the significant increase in interest expenses suggests that the company is shouldering a substantial burden of its rising debt obligations. The financial performance of the company's segments and regions reveals a concerning trend. The Americas segment, accounting for 88% of total revenues and net loss, performed poorly in the 9 months ended September 30, 2025. Europe and Asia Pacific also underperformed, with revenues and net losses amounting to 7% and 5%, respectively. Unfortunately, there is no indication of a region or segment that demonstrated good performance during this period. Management is projecting a challenging outlook for the company, citing significant research and development expenses and expected losses for at least several years. However, they are optimistic about the potential for growth through the successful development and commercialization of product candidates. Key strategies include initiating pivotal programs for certain products, sharing top-line data in 2026, and submitting BLA applications under accelerated approval pathways. The company's pipeline is robust, with several promising candidates, including RGX-121, which could be the first approved gene therapy for MPS II, and ABVARG-X-314, a collaboration with AbbVie that may yield up to $1.38 billion in milestone payments. Financially, management believes the company has sufficient cash to fund operations for at least 12 months, and has secured additional funding through a loan agreement with HCR. Overall, while the outlook is uncertain, management's strategy focuses on driving growth through innovation and strategic partnerships. That concludes the financial summary for REGENXBIO INC. Feel free to comment below, and I will be happy to answer them when possible.